presentation contains current opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone, and welcome to the Compak YouTube update for August the 29th, 2023. I'm Mo Ansari, President of Compak Asset Management and host of Market Wrap. You can get the daily edition of Market Wrap simply by going to compak.com/media. That's where you can go and download all of the, download the app, where you can it'll give you a link to the app. You can go to the iTunes store, download the Market Wrap app, where you'll get the daily edition of Market Wrap. You will get the YouTube updates. You can get the weekly newsletter, the one page that I put out, Mo's Market Minute. You can get all of this information simply by going to compak.com/media. I'm going to talk a little bit about the Fed, the market, the economy, and then look at technical analysis in the week ahead. I think the big thing about the Fed this week is going to be what happens with the PCE. That's inflation at the wholesale level. It's the Personal Consumption Expenditures Index. That's comes out. Shows that's what the Fed looks at, and it comes out on Thursday. If that shows that inflation continues to go down, as it has been, all the way down right here, the headline CPI, but interest rates have been going up all this time. I think we're coming to the end of the interest rate increase, and I'll talk about that also. I think the last interest rate increase in July was it. I know there's an 86% probability they're not going to raise interest rates next month in September when there's the next meeting, but there's still a 48% probability they're going to raise rates in November. I think they're going to back off from that also, especially if we get lower inflation on Thursday, and then on Friday we get the unemployment data. It shows that only 150,000 jobs were created. That would be the lowest number of jobs created since December of 2020. So I think that will really play into the Fed. We're starting to see, we've got the JOLTS report today. That's the job openings. It was one of the lowest numbers we've seen in 2.5 years, where the number of job openings is coming down dramatically. That means the economy is slowing down. Last year, everybody was looking for a recession, and I said no recession until unemployment goes up. Now no one's talking about a recession. I think the economy is going to slow. It'll scare the heck out of the Fed and all the politicians that are going to run for election next year, and that will cause, I think, people to realize that the Fed is done. As soon as the market realizes the Fed is done, it takes off to the upside again, just like today was a wonderful day in the market. Quarterly growth is surprising to the upside. This is the Citi Economic Surprise Index. On the left, it is an estimated GDP growth. You can see that GDP has been going gangbusters. It has come up and continues to do well. So the economy is still doing well, but I believe it's going to slow. Looking at the labor market tightness, you can see number of unemployment. These were the unemployment numbers, came way down. It's sort of stabilized right here. Job openings, on the other hand, topped out, and they're starting to come down. The number of job openings, the lower the job openings, people start to realize that, okay, I better hold on to my job. And they will not ask for increases in pay, which brings down wage increases, which brings down inflation. I will do a webinar next month on the 19th. If you want to go and sign up, go to compak.com. That's right at the bottom of the page. And on the 17th of October, I'm going to be in Scottsdale. Looking at the technicals, today we broke above the 50-day, the red line, and the blue line, which is the 50-day and the 20-day moving average. This whole thing, which was like an 1, 2, 3, 4, 5, but now has turned into an ABC correction. After we see a fifth wave top, we get an ABC correction like we did here. We got an ABC, or we get 5 waves to the upside. We got 5 waves up, 4, 5, and then we got an ABC correction. This goes much higher than where we are now. Then this whole thing is correcting. We get above 46.37 intraday, 46.07, and then 46.37 are the two resistance areas. Support still will depend how the numbers come out on Thursday and Friday. Weekly chart, we came down to the 20-week moving average. That's the red line. Held it. Now we're starting to turn back up. This could be wave 1, 2, 3, and this was wave 4, and now we're going to start wave 5 to the upside. Target again 46.37. That is this high right here. And then if we can get above that, then we're looking at the all-time high, 46.18. That's the beginning of last year. And if we get above that, then the fifth wave target, that's the projection from here, comes to 5,000 to 51.50. But that could take until next year. This is a weekly chart where each one of these lines that you see, vertical lines, are 1 week of trading. And this goes back approximately to 2020, about 3 years or so, 3.5 years or so, the chart does. So it could take some time to get back up there. But first we have to get above 46.37, then 48.18, other two resistance areas. Nasdaq also had a great day today, getting above the blue line, which is the 50-day, the red line, which is the 20-day. Next resistance is this 14,450, then 14,650. So we'll see how we go from here. Again, will depend on how the inflation data comes out on Thursday and the unemployment data on Friday. Weekly charts, as long as we stay above 12,750, we closed at 13.9, close to 14,000 today. 14,650 is next resistance. Breakout above that, we are headed to this. Long term, it's a much higher number that we're looking at. Interest rates. Last week, I was really worried about this market getting up to this high right here, 4.33. We hit that high, just got above it slightly right here, but now we've come down dramatically. If interest rates broke out to the upside right here, that could have been a problem for the market. That's why the market was struggling. But if rates come down, and again, inflation has got to come down, unemployment has got to go up. If that starts to happen, rates will continue to come down. But we don't want them to come down too much. We want to stay in this range, 4.3 on the upside and 3.3 on the downside, or really 3.75 on the downside right here, 200-day moving average. That's what we're looking at. Gold market had a good day today. Again, today interest rates lower, dollar lower, push the gold market higher. Those are my thoughts, but I think this week is going to be pivotal, how the PCE comes out and how the employment data comes out on Friday. That'll set the tone for the next month of September. If we break out to the upside and start gaining momentum, then the correction was over. We got about a 5.5% correction in August. Now we've come back up from there. Then the correction is over and probably we're headed higher. And all the people, again, that are waiting and watching will be left behind. And as I said, it was pruning and planting in August. Now it's time. You've done all of that. It's time to make sure your portfolio is in the right shape. If not, call us. Give us a call. We'll be more than happy to answer your questions and set up a portfolio for you absolutely free. All you have to do is go to compak.com and set up an appointment. Thank you for joining me today. I will be back next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.